Hello, everyone. Welcome back to another episode of XDC APAC Podcast. My name is Sani Mohanty. I'm the head of ventures and ecosystem building at XDC Network based here in Singapore. I'm really excited to be back after a kind of a gap and to speak about asset tokenization, digital securities, and the future of real-world assets on the blockchain. Why does this conversation matters? So basically, we are witnessing a massive transformation in financial markets. From real estate to private equity, traditional assets are being digitized, unlocking new opportunities for liquidity, efficiency, and global accessibility. And one company leading this change is InvestaX, a pioneering platform at the intersection of regulated digital securities and blockchain technology. Joining me today, Alice Chen, co-founder from InvestaX, a platform licensed by the Monetary Authority of Singapore. They have made significant strides in bridging TradFi, traditional finance, and DeFi, decentralized finance, and recently deployed their solution on the XDC network to bring even more efficiency and interoperability in the space. In today's conversation, we're going to cover what is InvestaX all about and how is it shaping the tokenization landscape, why regulatory compliance is crucial in digital securities, how XDC Network powers InvestaX, enabling scalable and cost-effective tokenization, and some, last but not the least, some real-world applications and future trends in blockchain and finance. So let's dive in. Alice, welcome to the show. It's great to have you.
Thank you. Thanks for having me. Been looking forward to this chat. Thanks again. And I'm ready to dive in deep into all RWA asset tokenization.
As much as know about what InvestaX is doing, also like to know your personal story, because we've met before. We've discussed many a times about your journey into the space. You were not from this space originally, were you?
No, I don't think many people were, right? I think we all came from some alternative, and a lot of us came from a traditional career. I started out as a lawyer, immersed in practicing law in the US and then later on in Asia. And I had heard about Bitcoin like everyone else did in 2012, which is fairly early on. Didn't really do much in it, thought, as many people did, it was a scam. But really started paying attention to it in 2017. That was when we all know ICOs took off. And we started paying attention primarily because we saw the capabilities of new capital formation and a new strategy and method to raise money from globally without any intermediaries. Right. And that was a phenomenal concept. Like it or hate it, I won't debate that. Yeah. But the fact that introduced this new form of what we call investment process was really fascinating. That's when we really started focusing on it. But our platform, InvestaX, didn't start out blockchain-based. We were a Web2 company.
Oh, interesting.
We did real estate crowdfunding. So my background, going back to my legal days, I was a real estate lawyer and corporate finance lawyer. So, transacted billions of assets, real world assets, real estate, and saw a lot of the inefficiencies, and the time to close these deals were significant. So whenever you see these types of inefficiencies in the traditional world, there's also an opportunity to disrupt. So when my partner asked, hey, what do you think about this whole crowdfunding thing that's happening in the US? I said, I'm completely sold. That this disintermediation will benefit the entire investment community. So we started a Web2 based crowdfunding, real estate crowdfunding platform.
In Singapore?
In Singapore.
Singapore, okay.
It was very low tech. It was my first startup.
Okay.
So that was quite a daunting experience, of course, to go from something that was basically selling itself, my legal services at a reputable law firm like Skadden, DLA Piper, to then pushing something that hadn't been done in Asia before, and also not having any brand recognition. You're basically starting from ground up. It was challenging and difficult. Again, 2017, when we saw the whole ICO boom, we started paying attention to the underlying technology, which is the same as, those used in all the ICOs and cryptocurrencies, blockchain technology. There's various different protocols. Of course, there's XDC. And I remember it was called something different. I've been following XDC for a long time.
Absolutely. It was called Zinfin.
Zinfin. Correct. Correct.
Yes.
What we were intrigued by was the technology that was powering all of this. So there were a lot of internal debates. And ultimately, we decided to fully transition our Web2 platform to a blockchain-based platform.
Oh, wow.
Rebuilt the entire platform.
Okay. Wow. That was must have been a lot of work for you.
Yeah. A lot of, I think, questions whether we were doing the right, because it hadn't been proven.
Yes.
2017, I don't think the market even knew, RWA didn't even exist as a term back then. We called it security tokens.
Yes.
It's gone through many iterations since then, digital securities, and today RWA, which for the most part are regulated assets. There are some unregulated RWA tokens. You can tokenize art, for example, or collectibles. But in the form that you offer it, where it becomes an investment product, then it's heavily regulated. So that's where my background in law became really useful and helpful.
Absolutely. I remember those days. I think we met several times at various conferences itself in Singapore, right?
Yes.
And those are the days people are talking about ICOs and security token offerings, right? And we didn't hear about anything to do with real world asset tokenization and stuff like that. It was it's very early days, and things are very fluid, right? Yeah.
I remember the early days, 2018, 19, going to crypto conferences and get a little bit of being laughed out of the room because we were dealing in regulated security tokens. It was also back then when Securitize, now one of the largest players out of the US, also started down this path in the US. And there were some other great companies which are no longer with us today, unfortunately. But we were early. We were definitely early. There are companies like Open Finance, who started one of the first exchanges. But I think you can't leapfrog the initial steps and the infrastructure that's needed to build the entire industry. But certainly I think we're getting there now.
InvestaX has been there since, obviously, you rebranded yourself from Web2 company, crowdfunding company, to a Web3. Incredible. So let's just know a little bit more about InvestaX and the core mission that you have and the vision of the platform.
It's important to remember that this industry is constantly evolving. So our platform is also trying to stay ahead and evolve with the demands of the industry. So today, we consider ourselves a platform that's institutional driven with institutional products. And as you said, bridging the gap between traditional finance and the digital asset ecosystem by offering them institutional grade investment products to the millions of users whom we've partnered with through fintechs and digital asset platforms, where they might not have had access to these types of real world assets previously. And we offer them on a licensed and integrated platform. So we never shied away from regulations from day one. It took us years to actually obtain the licenses here in Singapore. We do have a capital market services license to deal in securities and a recognized market operator license, basically an exchange or ATS equivalent to trade these types of tokenized securities.
So obviously, just out of curiosity, so these kind of licenses already existed with your Web2 company, or you just managed to get it on the way when you launched?
So to even operate the Web2 platform we had before, you needed to have a dealing license, broker-dealer license. So we obtained that CMS license prior. The recognized market operator license was obtained post our transition. We entered the MAS sandbox. I'm sure you've heard about the MAS sandbox here. Generally reserved for platforms and companies that are trialing new technologies. And we were one of the first companies to enter the MAS sandbox.
Amazing. That brings to my next question. So what are the key milestones since then that you achieved?
Yeah, I think there's been so many.
I'm sure.
Well, I think one of the key, so pivoting from Web 2 to Web 3 was a massive undertaking. And we were doing it before any product market fit. And we were essentially giving up revenues and the ability to generate revenues in order to build out the entire platform, which worked okay for us because we were under the application process, so we couldn't actually do a lot of the activities. The broker-dealer side still could coexist, but the RMO exchange side could not actually fully operate yet. The build-out of the Web3 platform, blockchain-enabled, the token issuance. We did have our own smart contracts for the issuance of tokenized assets. But there are so many different protocols, as you know, now in the ecosystem. A lot of them are specifically focused on RWA. And I know XDC has been around for a long time, and even from the early days had a focus on tokenization.
Absolutely.
So it's one of the reasons why we've integrated with XDC.
Absolutely.
That was just one. I think the RMO, I think the RMO licensing, which took several years, was another key milestone. Altogether, I would say about over 3 years. But the way it works in the sandbox is you apply separately to enter the sandbox. And once you exit the sandbox, you also have to apply for the full license. So that whole process altogether might have taken, 3.5 years or so.
Were you aware that this is going to be that long?
Not really. I mean, but I think, credit given to the regulators as well. It's an entirely new process and industry. So they've try to understand how the technology works and have hired people who are well-versed in this space to assess the applications, but they're just overwhelmed, I believe.
How does this compliance, because obviously you've discussed about it took like 3.5 years, and obviously there must be different phases to that complete entire duration that you have to wait before you could get that full license. So in your opinion, how compliance and regulation matter in tokenization?
I think it's one of the hugest hurdles that the industry has had to overcome and are still overcoming. Lack of clarity in terms of regulation will really hinder innovation because people are afraid with respect to what is legal and isn't legal. And with what we've seen in the U.S., at least with the prior administration, where they had Operation Choke Point to essentially, kill the entire crypto industry, had a massive impact. People were afraid to enter the U.S. People were afraid of what the consequences might be down the line, not knowing on day one whether their project is legal or not, right? If there's retroactive enforcement, it really hinders, I think, a lot of innovation.
Yeah, right.
Yeah. So it's one of the biggest factors.
Absolutely.
Compliance and regulatory clarity.
I think Singapore was way ahead in the game, even during those times as compared to US. What do you think?
Yeah, for sure. I'm very actively involved in the Singapore fintech industry. I'm now just elected to be on the Singapore Fintech Association Executive Committee.
Okay.
So having a direct dialogue with the regulators who are overseeing the industry is extremely important.
Yes.
And also to push forward sustainable regulation that fosters innovation at the same time.
Absolutely.
You want to protect consumers. There's a reason regulation's there, but you also want to encourage a little bit of the pushing boundaries and the innovation that's going to come from the industry.
You're doing great there. I see your updates on LinkedIn. Very active member of Singapore Fintech Association. Yes.
Correct.
Okay, because you touched upon XDCs and Fin back in the day. Obviously, XDC Network has been known as a real-world asset tokenization platform from day one, as well as trade financing. But I'm sure you must have come across other protocols, like when you were planning to collaborate or partner with protocols in general. So why XDC?
There will be many protocols to choose from. We are protocol agnostic. And the way we look at protocols is it's a network.
Yeah.
And for businesses, that's a network of investors, issuers, assets, and service providers.
Yeah.
So XDC has built a very strong ecosystem. Obviously, we all know that XDC has partnered with accelerators, Tenity, Plug and Play. So it's actually putting money where its mouth is. We also know a number of the projects that you guys have funded. It's very, very much aligned with what we're trying to build.
Yeah.
So, of course, there could be multiple protocols that are integrated on a platform, and there could be different use cases.
Yeah.
XDC early on started in trade finance.
Yeah.
And that is a perfect use case for tokenization.
Yeah.
There'll be other use cases. And XDC, I know, has had a very strong mandate in RWA tokenization recently as well. So it's one of the primary reasons we integrated that.
Because you
XDC.
touched upon those programs, the acceleration programs. So we're running various programs across the world, right? So Plug and Play Silicon Valley is where you sort of shown interest and went ahead with them.
Yeah.
So that's completely focused on RWA.
Yeah.
I'm also running a program out of Singapore, focused on payments.
Oh, right.
Yeah,
okay. So I think that goes hand in hand.
Yeah.
Payments, tokenization, the way we look at this world of digital versus analog. Eventually, and this is maybe just our belief, all assets are going to go on chain or become digital.
Yeah.
So we're just trying to do our part, as you are, to bring more assets into the digital realm.
Yeah.
And there could be parallel universes, right? There may be an analog and paper form that some people are more used to, but we're seeing more capital coming into this world as well. So I think it's only prudent to stay aware of the asset allocation, what's coming in the digital asset industry.
Could you share a real world use case that was built on the platform, that sort of encompasses DeFi, maybe RWA, so that, for the understanding of our viewers.
Maybe this is a good time for me to touch upon one of the other sister platforms we did build. So InvestaX is a Singapore licensed and headquartered tokenization platform. But because we started this industry early on and we saw the gap or some of the missing infrastructure, people talked about the benefits of tokenization, transparency, immutability, creating liquidity for illiquid assets.
Yeah.
Well, we started tokenizing things and that liquidity never came.
Yes.
So then we built a sister platform called I-Access, which was the world's first AMM for real world asset tokens and security tokens, modeled after Uniswap. But the difference is it's offering regulated products.
Right.
So you did need to have the licenses to offer and custodize these types of assets. But it's what we call permission DeFi. Once you've done the KYC and AML checks to onboard onto the platform, all of the transactions are smart contract based.
Right.
So you do not have a centralized system like we do on the InvestaX platform with order books and matching engines. That's one of the key differences between these platforms. And I think this came up because you were talking about the DeFi element of what we built. And then
I also know that you've got something called iSwap.
iSwap is now rebranded as I-Access.
Okay, okay, that was
Correct.
rebranded. Okay.
Correct. So we just took the swap away because the platform now does so much more.
Right.
It is not just a swap mechanism. It has a launch pad. It does lending, borrowing of RWA assets as well, and has the AMM functionalities.
A portfolio company of ours, right? They have partnered with, they are into renewable energy. They are creating carbon credits out of waste heat out of the Europe, right? And obviously they want to put real estate in London. Obviously, they saw our partnership on the press release announcement, and they reached out to me.
Yeah.
So how would you, if a client comes to you, say, hey, I have very illiquid real estate, okay, but I still have potential Web2 buyers. I mean, obviously the real world buyers who are interested to put in the money, but I'm interested to put those into, tokenize them on a blockchain.
Okay.
If they would come to you, how would you, sort of advise them where to start, how to go? And I know this process is quite unclear for me because I get a lot of questions and I also hear a lot of things like, hey, people have tried to tokenize MR, Burj Khalifa in the past, where nobody has succeeded. The market is still very not mature or liquid or something. There are challenges.
Yep. Yeah.
So what's your experience, handling all these kind of use cases per se?
Real estate is a hot asset class that people come to us with. Funds. There's private credit, all types of different use cases, as you mentioned.
Yeah.
The first question we generally ask is, what are your goals and motivations for tokenization?
Right.
Is it to raise money?
Yeah.
And is it to raise money from a large pool of investors? Or is it to have an easier management system that's more automated?
Yeah.
And we try to understand their goals and motivations.
Absolutely.
Most of the time, most people are still looking for fundraising.
And
distribution.
So. Okay.
Some of our recent partnerships and announcements, we've partnered with fintechs and other, centralized digital asset platforms and crypto exchanges. Those types of users want to access real world asset tokens, but they don't want to off ramp and come out of their stable coins or crypto to buy those assets, but they want to diversify into more traditional wealth management stabilized products.
Okay, off ramp into fiat though.
They don't want to off ramp because we all know the complications and also the cost related to that.
Right.
And it's why you saw during the bear market an uptick in companies and platforms offering more traditional, treasuries and money market funds during the bear market, because there was just no yield in the crypto market.
Yeah, absolutely.
I think it really originated from the last cycle, the last bear market cycle, RWA tokenization.
Yeah, correct. The narrative,
Prior to that, we called it digital securities. Prior to that, we called it security tokens. But, to come back to your question, how would we go about it? We try to understand their motivations. Everyone still wants distribution, and it's why we're building out these B2B relationships to provide a wider distribution channel for, the likes of, crypto exchanges and fintechs and asset management firms. And from the issuer side, we're looking at more institutional grade type of products.
Right.
For those who have been following us, for a while, you would have heard different narratives. And we're still big proponents and big believers in tokenization bringing the most value to private market assets because of lack of accessibility. They're private, so you don't have a lot of transparency. You don't have a lot of data. It's hard to value. And there's really very little trading. There are secondary markets, but generally the trades happen in very large blocks, and there's this concept called an illiquidity discount.
Right.
So tokenization can bring these types of private market assets the value similar to what the public markets did with all the infrastructure and new processes. Whenever I talk and when I'm doing some classes or trying to educate people, I make reference to the public markets and the expansion of the public markets, where you saw dedicated trading venues. You saw inventions like the DTCC central depositories and electronic trading floors. None of that exists in the private markets. So we were bringing in that infrastructure to the private markets. However, it's a long-winded story. It's slow, and a lot has been built to date. The infrastructure is there. We are missing a few pieces, like market makers for real-world asset tokens, and they're coming. We just saw some new announcements earlier last week about Wintermute, and other market makers coming into this space. But that had been largely missing. So then I think the move from the industry has been to focus on the public market, equities, treasuries that are already liquid. And a lot of people would ask, what's the point of tokenizing something that's already liquid?
Yes, absolutely. I totally agree with that.
Right? And so we get those questions a lot. Not everyone actually has access to those assets. If you live in Singapore, you have 5 different brokerages maybe you can go to and access these assets.
Outside of Singapore,
plenty of unbanked, plenty of less developed markets where they can't access U.S. equities, where they can't access U.S. treasuries. And so we bring that to those markets. And then the other reason behind it was because a lot of the crypto money, I call it a reverse migration of wealth. The crypto money looking for wealth management products during a down cycle or a bear market. So those were 2 of the primary reasons for focusing on that sector now. Not to say that we're not excited about what tokenization can do in the private markets. We're still focusing on that, but we're just trying to build up more asset classes that are currently in demand. And so we've done some U.S. treasuries, gold, tokenized gold.
Okay.
And of course, still looking at some of the SME financing and private credit.
Is it quite different because obviously you have a license out of Singapore? Does that allow you to cross the border and work with overseas clients? Are there any challenges or?
Definitely challenges. We set up in Singapore because, as you mentioned, regulators were quite progressive and really took the effort to understand the industry. And when you go overseas, there were, of course, there's pushback. U.S., for example, we didn't even touch U.S. investors. Yeah. And now we're looking, because of the new administration, looking at expanding to the U.S. Yeah. And how do you do that? You form alliances, partnerships. Yes. If you're going to do marketing on the ground, to do that legally, you do want to have compliant way of soliciting. Our pitch in Singapore is, so long as investors come on board and comply with the Singapore offering rules and the accreditation rules, if they need to be accredited, then we can offer it to anyone globally because they're accessing our platform in Singapore.
So what's next for the umbrella company InvestaX? You've done a lot of tokenization in the real world asset space already.
Yeah.
So where's the future headed, and where is InvestaX in that roadmap? Basically,
bringing more assets on chain in any way we can, whether that's through collaborate. And a large focus of it right now is with the B2B relationships. That is, in our opinion, the fastest way to really build the user base and also assets and bring more assets onto the platform.
Right.
So you take, for example, I think we recently announced a relationship with 4 different regulated crypto exchanges, Coins PH, InvestaX, Coins Thailand, and CoinHako here in Singapore, where, it'll be mutually beneficial. Our investors can access crypto, their investors can access regulated real-world asset tokens through this partnership. I mean, I-Access already did a similar kind of partnership with Line app, which is one of the biggest
Line, yes, the WhatsApp version of
WhatsApp.
WhatsApp,
correct?
Right?
In Japan.
Japan,
basically, a redirect for users from the Line app who want or may want to have some exposure to real world asset tokens.
Okay, that's quite good, actually. Helping both sides, like, the users who like to access the digital assets on a licensed platform. You know. So, wow, that's interesting. I'd like to know more about this one.
Well, I think one of the biggest challenges, aside from lacking certain key infrastructure like, dedicated trading venues and having market makers on exchanges, one of the key challenges has been distribution.
Yeah.
So that's a key focus for us, is to really line up those distribution channels.
Okay.
And also line up institutional grade assets to offer to these users.
Institutions, okay. Wow. One is institution and institution grade products.
Yes, correct.
That was good insights into what you're doing at InvestaX and the different platforms that you've launched recently and the partnerships. But in generally speaking, where do you think this market, is going to be in the next maybe 2-3 years or 5 years?
I really hope when we started this path in 2017 that we'd be a lot further. But then I don't want to get my hopes up either, because I am seeing so much good activity with the likes of reputable institutions coming in, which provides the affirmation that everyone who's building in this industry needs. But given how long it's taken for a lot of the subsets in our industry to grow, for example, even when you look at, I think, Bitcoin was introduced in what, 2008?
8. Sorry, yes.
But no one
8.
really did anything for years,
It
5,
does.
6 years, right? And our industry, I call it the RWA industry, security token industry, it's only really been around for about 6 years or so.
Yeah.
We were really early. This being a more heavily regulated space will have more challenges, but also opportunity because it is a gatekeeper as well, right?
Correct,
So not everyone's going to want to go down the license route, which is extremely painful.
3.5 years. It is quite long.
When you see BlackRock, KKR, Hamilton Lane, and Securitize all coming in and doing something real beyond just pilots.
Yes.
We've seen so many pilots.
Oh, yes. Absolutely.
Over the pilots. It really does offer the credibility and the affirmation, I think, for all of us who are really have been building to continue building. And so 2-3 years seems quite quick. And I would say maybe in 5 years. I mean, there have been, projections by consulting firms by 2030. I think BCG had a report, 16 trillion of assets will be on-chain and tokenized. If we look at maybe the biggest use case of tokenization to date, I always reference stablecoins.
Yeah.
Right?
Yes.
But on the other hand, you can't just use stablecoins to go buy crypto. There has to be other products that you can transact with. And this is where we play that role, is to bring real world assets so that you can have all the assets settle on chain and truly benefit from the innovations of blockchain.
Absolutely, truly. But yes.
So I'm being very optimistic. I don't know. I'd love to think that 2030 will be the, I guess, inflection point for all of us to bring 16 trillion worth of assets on chain.
On chain.
Yeah.
I think we've come to the end of the podcast today. It was absolutely delightful for me to have you on the show, the XDC APAC Podcast, which I've started.
Oh, great. Amazing. Thank you.
As part of the program.
We need more of this.
Yes.
I mean, when we first started, I remember we were one of the first companies to do a security token conference. Maybe 40, 50 people showed up. And it was a huge learning curve. 2020 and 2021 were also periods of a lot of education.
Yeah.
Now we've gotten to a point where people actually can have a pretty good understanding of what we do in the industry. And I think we absolutely need more of these types of podcasts.
So before I let you go, and obviously you're so busy and got calls, how do our audience, we have so many people asking me, InvestaX would like to connect, where do I start? Because obviously, how do they connect with you directly, or can they or not?
Oh, of course. I'm easily findable on LinkedIn, or just type in InvestaX, my name, and then also our website, www.investax.io. We also have our own YouTube channel if you want to go follow that. Education is big component to building out new industries.
Thank you, Alice. Thanks for your time.
Thanks for having me.
And for the viewers, thanks for watching. So I'll be back again with another speaker, another podcast. Stay tuned and take care of yourself. Bye-bye.